Okay, well, good morning again, everyone. Thanks for joining the open enrollment meeting. We are going to talk about insurance the entire time today. We are relatively sure that you have been looking forward to this meeting as much as we have. Special thanks goes to Wendy and Mary, who have helped put everything together. So before we get started and I walk through the presentation, I want to pause here and let Wendy say just any introductory comments that she feels are appropriate.
Hi, good morning, team. Just want to introduce you to Ben. He is our broker along with Sachi. She does our benefits. I know she's not on the call today. He's going to go through the enrollment guide. Any questions, let him know or reach out to me and we'll get everything taken care of.
Okay, very good.
Ben.
Thank you, ma'am. Wendy, just a quick IT thumbs up. Can you tell me if you can see my screen moving back and forth?
Yes.
We can. Yes.
Okay, great. So we're going to start today, y'all, with just some administrative items. For example, how do we say our yeses and nos? So right now is open enrollment. You can make any change that you would like. We're going to say all of our yeses and nos at this website, hwa.employeenavigator.com. So if you haven't been to that system before, we'll show you just some screenshots of some prompts. And then when you have questions, if you have questions, you can reach out to Wendy. You can also reach out to myself or Sachi to just help make sure you're moving through the process. But everything is online, and we're going to use Employee Navigator just like we have in the past. This is a screenshot of the first page that you will come to. If you had already gone through this drill before last year, then you can reset a forgotten password. If you are logging in for the first time, then you'll go to Catto&Catto.employeenavigator.com. So both of those sites are going to feed to the same place, but it's just going to be different depending on if you have been in the system before or if this is your first time. So if it is your first time, you'll register as a new user. First name, last name, company identifier is HWA, LLP. You'll plug in the last four of your social and your birth date, and then you'll begin to see the prompts like we are showing right here. You'll enter in basic demographic information, put in dependents, and then you'll move to the actual election process, where on the right-hand side, all of your choices, your yeses and nos will populate. And on the left-hand side, you'll be able to see the plans themselves. And we will politely annoy you when we get to the life insurance section to elect a beneficiary. That's where the proceeds of the life insurance go if you are no longer living. So we do want you to make sure you choose a beneficiary. We have too many horror stories. One most recently where somebody put in somebody they probably shouldn't have for a beneficiary, and they broke up, and the employee, one of our clients, the employee passed away, and the individual who was named as a beneficiary showed up at their office demanding some cash. And so it was just a big mess. We do not want you to have to go there. This screen just simply shows you that you can do the enrollment via your computer, or you can do everything on your phone. If that's a better way for you to make your selections, then everything is available. It's just in a different format on your phone. So we're going to talk about the benefits. This is where we'll spend most of our time on the next couple of pages. So we kept the carriers the same as we did last year. It was a difficult decision, and part of our job is to review and analyze not only what's available in the marketplace to compare it to what we currently have, but then based on the actual utilization, how many folks are going to the doctor, prescriptions, all of it's de-identified, but we get like a aggregate report, and we review that to make sure that there is still best value in this benefits program. And so we did not change any carriers this year. And so all of the things that we're going to be talking about that I'm scrolling over right here are things that we have talked about in the past. The purpose of this is just the once a year re-education and opening it up for any questions. So all these different lines are inside this packet, and then COBRA just means that you can take this with you if you are no longer working. So here at the bottom of page 5, what this simply means is right now during open enrollment, you can put someone on a plan, you can take somebody off. Outside of open enrollment, what you pick sticks for 1 year and you can't change it unless you have one of these bullet points going on in the middle of the year: marriage, divorce, birth of a baby. The biggest thing that we like to highlight is what these are IRS approved. They're called qualifying life events. So there is a preset determination of if you had a baby, then you can change your election and obviously add the baby onto the plan. The biggest one that is not on here that the IRS says we're not going to let you do that, Ben, is I just don't like what I chose during open enrollment. So to the degree that you can be as sure as you are able to be about who you want on and off the plan, open enrollment is the time to do that. We are continuing with Blue Cross and Blue Shield. Your policy number is the same. Your network is the same. The plan year starts over the 1st, but remember the benefits that we are about to talk about run January to December. So that can kind of be confusing sometimes. So your deductibles and your out-of-pocket max will always run, have always run January to December. When the plan year starts, when the policy year starts, that's an administrative function. So it also ties to open enrollment, when we can do that and when we can't. So this is where we'll spend the most amount of our time. Let's talk about the different plans that we have. We have a base plan, mid plan, and a buy-up plan. We'll talk about their similarities and their differences. And I will move at a brisk pace. We're not going to cover everything that can be covered, but please reach out to me if you have any questions that wouldn't be appropriate for a group setting, because we want to make sure that you get what you need. But these plans are the same as they were last year. We have an HSA plan, 2 PPO plans. Let's compare and contrast them. The HSA, when you go to get your preventative services, functions the exact same way as the mid and the buy-up plan. So those are your annual physicals, mammograms, pap smears, preventative colonoscopies, if you're over 50, childhood immunizations, things like that. So those are all $0 to you, no matter which plan you're on. Now, when you go to the doctor, this is where the HSA is going to function differently than either the mid plan or the buy-up plan. I actually have an HSA with Blue Cross and Blue Shield, so mine works the same way as yours would. When you go to the office, you stay in the Blue Choice network. And when you go to the doctor, let's say a primary care charges $200 and the network discount is 50%. So 50% of 200 is $100. You would pay $100 in that example because that was the top line charge for the doctor minus the network discount, which then leaves your responsibility. HSAs are higher in terms of the cost of usage inside of an office visit, whereas you'll see the mid and the buy-up plan, you have a flat rate. That's what a copay is, just a flat rate when you go in. So the mid and the buy-up have a flat rate on the HSA. You do not have a flat rate. In fact, all HSAs are structured this way. That also is set by the IRS. So mine works the exact same way. If the specialist charges $300 and you get a 50% network discount, and that's fair to Midland, reasonable. That's usually going to be about 50%. Sometimes more, might be in the high 60s. It just depends on that particular provider. But if the specialist charges $300 and you get 50% network discount, then you're paying $150 to go see that specialist. Whereas on the mid and the buy-up plan, you have a lower flat rate. Now, there are trade-offs on each of these plans that we'll highlight as we go forward as well. Retail clinics work the exact same way. You've got copays for the mid and the buy-up, and then you have, you're paying the discounted rate. Now, where they do, again, work the exact same way is you do have a copay, a flat rate for virtual visits. Now, they differ in the amounts, but you do have a flat rate for virtual visits. That's MD Live 24/7, 365. The deductibles all work the same way. They're just different amounts as well. So the deductible is going to be asked of you when you go into a facility, when you go into a hospital. So if you need a back surgery or if it's an emergency procedure, those bigger ticket items, you are responsible for your deductible before insurance starts to pay. So you fill up that bucket number 1 before insurance starts to pay on that expense. And so on the HSA, the reason HSAs are called high deductible health plans right there is because the deductible is high. So you've got $6,000 of financial risk in the HSA. And for purposes of this presentation, I use the individual amount, but you double the numbers. If you are family on the HSA, they're triple if you're on this plan, and they're triple for family if you're on the buy-up plan. But for purposes of the deductible, you've got $6,000 on the HSA, $3,000 on the mid plan, and then the buy-up plan. One of the reasons it's the most expensive is you have the lowest deductible. Now, after the deductible, you have this part. This is the most confusing part: coinsurance. Coinsurance kicks in after the deductible. It is a sharing of cost between you and the insurance company after the deductible until you meet your out-of-pocket max. So this is actually the first number that I look at in an insurance policy. This is your, if you're on the HSA plan, you are responsible for $6,000 January to December. Everything else, if there are costs above that, is laid off on Blue Cross, assuming it's in network and a covered service. So the reason why this is 0 is because 6,000, there is no coinsurance. Once you hit your deductible, you have therefore met your out-of-pocket max on that HSA. So when it says 0% after deductible for things like outpatient surgery, diagnostic lab, and x-rays, that means on an HSA plan, everything goes towards your deductible. You go in network, you pay the discounted rate. If that x-ray is $500, that $500 posts against and reduces that 6,000 deductible to $5,500. So you would have $5,500 left before you met your deductible. And on this plan, your deductible is your out-of-pocket max. Now, it works differently on our mid plan and our buy-up plan. What you'll see here is a $3,000 deductible on an individual basis. Coinsurance is 30%. Your out-of-pocket max here is $7,350, which means if you have a $10,000 bill, you pay the first $3,000. You have a $7,000 bill left. You're paying 30% of that $7,000. So that's $2,100. You would pay $2,100. That's 30% of that remainder of that bill, because the bills don't come in. They don't come in gift wrapped. They don't come in where they make complete sense. They come in 98.47, 487.32. They come in as they are billed by the provider. They're not all at one time. So once you hit 3,000, you're only paying 30 cents on the dollar. But you keep paying 30 cents on the dollar until the deductible plus coinsurance equals your out-of-pocket max. In other words, in the example I just gave of that $10,000 bill, you pay $3,000, then you've got a $7,000 bill. 30% of 7,000 is $2,100. 2,100 plus 3,000 is 5,100. Therefore, you've got a little bit left in order to hit your out-of-pocket maximum for the year. But after the deductible, you're paying 30 cents on the dollar. Same math works on the buy-up plan with respect to a hospital visit. You're paying $1,500, then you're paying 20 cents on the dollar, and that 20 cents on the dollar has to add up to 3,000. Again, how did I get there? 1,500. You pay all of that, then you're only paying 20%, 20 cents on the dollar. Once your 20 cents on the dollar equals 3,000, 1,500 plus 3,000 equals 4,500. That's how that math works. One of the bigger differences between the mid and the buy-up plan is right here, what I'm scrolling over. It's diagnostic lab and x-ray. So if you get a diagnostic lab or x-ray on the middle plan, that would apply towards your deductible. If it's done in the office or anywhere else, that is not on a copay. The buy-up plan, if you're doing diagnostic lab and an x-ray, if you're in the physician's office, then that is covered. You are not paying in addition to that. So that's a small thing, but if you have to get a lot of imaging, that's something to consider. Now, prescription drugs are handled the same way on these two, mid-plan and the buy-up plan. You have preferred and non-preferred. That's just where you fill the prescription. Non-preferred is CVS because CVS went through a merger with Aetna. On the HSA, they might say something to you like what they've said to me. Well, your insurance doesn't cover this. That isn't necessarily accurate. It just means you're on an HSA. You're paying the discounted rate when you stay in network, but you are not paying a copay on an HSA. I don't either. I'm going to check the chat real quick because it's lighting up on my end. Is Houston Methodist in network for the HSA? I haven't heard of, if they're in network for the PPO plans, they're going to be in network for the HSA. I'd have to double check, but I have not heard anything about Methodist being in provider negotiations or problems with Blue Cross and Blue Shield. But let me make a note just to validate that. A lot of times you and us will get an email when providers are working through contract terms with any carrier. We'll validate that and then we'll get you the right answer. Here's another question. Let me look at it. So there's another question, but it's a direct message. So the individual who direct messaged me, I will reach out to you to answer that question. Just so we're not talking about all your stuff with all of our work colleagues. But that's actually a great example. Please just, as we go through, I'll pause for a little bit just to check the chat to see if we're reading this off the same sheet of music. But if there are a little more personal questions, I will not offer those up to the group. But if something is sent to everyone, I'll validate it or tell you I need to follow up in a public format. Okay, let's talk about prescription drugs. Blue Cross has had, will always have a mandatory generic prescription drug policy. That means if there's a generic and a name brand and you want the name brand, then you're going to pay the difference between the two. That's not new. That's actually always been the way that they are. If there's a generic available, they're going to want you to take the generic. But if you want the name brand, then you're going to pay the difference. This one we spoke about earlier, just a public service announcement. CVS is not in the Blue Cross and Blue Shield network. So page 7, these are the costs. We did have a fair amount of utilization over the past year. So we are using our insurance, which is a positive. The reality that comes with using our insurance a lot was there was a difference in the rates, and it is being able to work with HWA and just the thoughtfulness with regard to cost and value. It's hard for all companies to maintain value in these insurance products because they are very expensive. It's really been an honor for me, quite frankly, just to see how the partnership approaches trying to make sure that this really is the best, because not all employers are that way. We work with hundreds of companies all over, but most of them are domiciled in Texas. And so we get a kind of a bird's eye view on just how different companies approach this on behalf of their employees. And this is much more generous than I normally see. The reason we're on this page, if you were on the HSA plan only, you get some money. Highlighting function isn't working very well, but HWA puts in $160 a month towards cost of care. So that means when you go to access care, you're not starting from zero. I have an HSA bank account as well. It's just a bank account in my name that can be used for medical, dental, or vision. The same would be true for you. It's a bank account in your name. Pre-tax dollars go in to that account, and you can use those for medical, dental, or vision. And if the account rather has a balance, then you have some money to spend. If it does not, then you don't. Carries over every year. You can take it with you if you leave the company, but they put in $160 a month. And I highly, 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 highly encourage anyone who is on an HSA to also put in your own money into your own bank account. It's not taxed, and put in as much as you can while still being sensitive to bills and gas and kid-related stuff. But this is a slide on health savings account. If you have any further questions, please just reach out to myself or Sachi. We can walk you through if kind of got confusing about some of the differences between an HSA and the other plans. This slide is for someone who is not on the HSA. And here's where it's going to get a little confusing. So I just want you to think about it. Let's back up. I want you to think about when you have a medical plan, the IRS allows us several different options to pre-tax money. So this plan is a flexible spending account. Okay, a flexible spending account is only for somebody on the mid plan or the buyout plan. That is because the IRS is going to give different options to folks who are enrolled in different benefit designs. The HDHP, high deductible health plan, or the HSA plan has the HSA bank account that you can put your own funds into. If you are on either one of the what I just call some of the copay plans, that mid plan and the buyout plan, you have a flexible spending account. A flexible spending account is different than a health savings account. Here's how it works. Flexible spending account is for known and anticipated future expenses like braces, or I know I'm going to have to go into the doctor and have a procedure done. So let me just use myself. One of my kiddos had braces. I knew that that was an upcoming expense. I pre-taxed money into a flexible spending account, and that money shows up on a debit card lump sum on day one, but it is payroll deducted evenly over time. And so that is the benefit of an FSA. The biggest drawback for an FSA is this: if you don't spend the money 90 days, 2.5 months actually, after the end of the plan year, so 2.5 months after October 31st, then you lose that money. That's an IRS stipulation. That's always been there. And so this would be for, I know I'm going to go into the doctor. I know I'm going to go into the dentist. It would be something that you have visibility on. It is not a savings vehicle. This is a spending vehicle. It is a way to pre-tax additional money, and it is payroll deducted out evenly over time, and you get the money lump sum on a debit card. Now, some folks like to use it for dependent care, which is great. Dependent care just does not come lump sum. It is, you don't get lump sum at the beginning. It's shows up on the debit card as it is deducted. So that's the biggest difference. This is just a screenshot of if you have less of your income subject to taxation, then there is more money to spend. That's what this indicates. So this is a screenshot that overviews that FSA. Those funds are available on day one, and it is for future known expenses. Okay, now that hopefully that is somewhat clear, this part may get a little confusing. Okay. Now, I told you that we have an HSA account for those on the high deductible health plan, that first plan, and we have a FSA account that is available for the mid plan and the buyout plan. Okay, there's one exception to all of that. And that would be, again, for the people on the HSA plan. An HSA plan participant would be like me. I have an HSA with Blue Cross and Blue Shield, and I have an HSA bank account. Okay. But an HSA participant has one other option, a limited FSA, and it is limited in that it's dental and vision only. So for example, my medical expenses that I put in money into my HSA account, if I worked for HWA, lots of acronyms here, then I would get $160 into my HSA bank account. If I had some known and upcoming expenses for dental and vision only, then I could participate in the limited FSA. Great. This is what I did because I knew in advance that my oldest daughter was going to have braces. So it's a perfect vehicle to drive, so to speak, for dental and vision if you already have an HSA. Dental and vision only. You cannot use a limited FSA if you're already enrolled in the HSA account. That's because you already have a way to pre-tax funds for medical. So the limited FSA is another option only for those inside the HSA. And what I should have done is I should have pre-taxed a little more, as it turns out, into my limited FSA, because my same oldest daughter just turned 13. She had braces, and then she got, glasses and contacts. And I'm going, sweetheart, you need to tell me if that kind of stuff's going to break it down. I can pre-tax this money, but 13-year-olds aren't thinking taxation is, that's not cool. I think it's cool, but I also won some rain gutters in an auction and I was ecstatic. So those are the kinds of things that I really get excited about at this point in my life. Dependent care FSA, just a screenshot to say you can use it to pay for those taking care of your dependents. It does not come out lump sum. Here's a mobile app. WEX has it. You can do it all on your phone. That is kind of helpful because if anybody has done this, it is annoying. It's annoying for me, but you do have to validate that you're using the funds for their intended purposes. Biggest item on this slide, y'all, is a freestanding ER is the same bill as a hospital emergency room. It's just an ER, not inside of a hospital. It is outside of a hospital. And the reality is, unless it is life or limb threatening, you're going to be sitting in the ER. It's a horrible place to go if you feel poorly, unless it is life or limb threatening. This is an example of MD Live. I am convinced this woman is not sick. I don't think anybody is that gathered when they feel poorly, but she's obviously living right. And the baby looks happy too. I have used a virtual care for, let's see, it was my third kid, pink eye, held the kid up to the phone, knew it was pink eye. The doctor says it's pink eye. So something like that is a really good way. I will tell you, I have done this also. I like coffee, and I was working in a coffee shop. I don't know what I was doing in a coffee shop at one point, but I was there, and I had cedar gets me every year. And so I just had allergies. So I needed a Z-Pack or something. And I did that inside of a coffee shop, and they're like, okay, open up. And I'm going, and people thought I was really weird. So I could have chosen to do that in a different location, like walk out to my car. Would have been a better idea. It's 24/7, 365. One thing that is really good, if you've been living in the past several years, you've probably heard about COVID, and that's probably affected your life. So they're actually offering some counseling sessions via MD Live, which I think is cool. They got a mobile app. We want you to be as happy as this woman. See how happy she is? She's so happy. You might be saying, what is she doing that causes her such profound joy in her life? Well, she registered online for bcbstx.com. She's a member. That's what makes her so happy. Basically, you can see where you are in your deductible. You can see, like all those examples I said, well, the first bill is here, and then you get a network discount. You can see all of that through Blue Access for members. There is a lot of information, a lot of real estate in this guide that is specifically about accident, critical illness, and hospital indemnity. Here's what I want you to know for purposes of attention span today and for absorption of the information. So Guardian is the carrier. These plans send money to your mailbox when defined and specific events happen. That's what these are. If you get in an accident and you seek care, depending on what the accident is, Guardian sends money to your mailbox. You can use that money to pay the doctor. You can use that money to go buy a coffee. It is up to you what you choose to spend on that. Critical illness, those are things like cancer, heart attack, stroke. If you, God forbid, receive one of those diagnoses, you actually get to choose a different benefit amount, and all of this will be an employee navigator. And if, God forbid, that diagnosis ends up with something that you are dealing with, then a lump sum amount comes to you because of that diagnosis. Hospital indemnity means if you go into a hospital and you stay overnight, Guardian's going to send you some money. So this is a way how to think about these things as if you wanted to outsource the risk of something happening for a premium. That's all insurance is, transference of risk for a premium. If you wanted to outsource the risk of, we have a lot of folks who, for example, have kiddos in sports. That's a decent way to think about, okay, if my kiddo gets injured in sports and we have to seek care for that, then it might be worthwhile to see if the accident plan would pay enough to your mailbox, just depending on the severity of the injury. Critical illness would function the same way. A lot of folks gravitate towards that plan for family history reasons, or maybe they've been diagnosed in the past, but they're all clear now. And hospital indemnity just transfers the risk of going into the hospital. And a lot of folks will use that to pay a small premium. But then if you have to go to the hospital, you're actually offsetting part of your deductible. So that's what we see a lot of folks gravitate towards these kinds of plans and what they're thinking about. So I'm going to reference these, but I'm not going to go into detail. If you have a specific situation, please reach out because we want to make sure that this is detailed, like as it relates to your personal situation. So this is critical illness. You'll be able to move a button on Employee Navigator. You can see whether it's worth it. You can choose different lump sum between $5,000 and $20,000. And then the things on the left-hand side would be the areas that it would cover. It's all the stuff, of course, nobody would choose to deal with any of these conditions, obviously. There is a wellness benefit in here. So if you go get your free physical on your medical plan and you show proof because you are so happy because you've logged into Blue Access for members, then they'll give you $50. It's pretty cool. These are the rates. It's easier to see them on Employee Navigator, but they are here for employee and for spouse. This is the accident coverage. Again, all of this will be on Employee Navigator. I just think it's kind of interesting to see, you know, I like to pick on this one, dislocation. I have a colleague who, whose son was a wrestler and just kept getting his arm dislocated, and she was very happy. Not that that happened, but that there was a little bit of a way to pay for the care that he needed. Now, don't go home and saying that guy at work said injure children for an insurance benefit. That is not this seminar. That is not where we're going. But the accident plan is if you get into an accident, or if you're the person who's really accident prone and all of your friends know it, then something to consider. This is the hospital indemnity. So they'll send you $1,000 and then they send you, depending on how long you were there. This is why we call these a defined benefit amount. So they'll send you some money if you go into the hospital. Rates are based on age. All of these plans, the rates are based on age, and all of this will be in Employee Navigator as well. Okay, we're going to talk about the Guardian lines. A couple of years ago, we made a transition to Guardian. The network is Dental Guard Preferred. It starts over on November 1st. But we have not changed anything in these plans. The biggest difference between the value plan and the network access plan is this. It's confusing unless you read really this. Okay. If you plan to use a dentist participating in Guardian's Dental Guard Preferred Network, the value plan is the right for you. So just remember it like this. If your dentist is inside the Guardian network, there's more value in plan one. If the dentist that you love is not inside the Guardian network, the network access plan is for you. That's what that means. You do have a big old benefit, $5,000 maximum benefit. I really only see this type of benefit in law firms and then maybe less so in like an accounting firm. So most carriers don't write or offer a benefit that would have a $5,000 annual max. And the way that works is you go in and let's say your preventative services right here on both of these plans are $0. But if you've got, so that's the x-rays, and let's say you need a bridge or a crown, then Guardian will spot you $5,000 on either plan after you pay your deductible. And so it's going to depend on where that bridge or crown would fall, whether it's a basic service or a major service. And so, and that's dependent upon the plan, whether your dentist is in or out of network, but they will throw $5,000 at your mouth per year. And so if you've got, God forbid, you should have 20 grand worth of dental work, you would have some coverage for covered procedures up to 5. And I actually have had years before my bride of 17 years had to have some major dental work done in 2019. And so we used our HSA funds for that. We used our FSA funds for that, but we didn't get it all covered by our dental policy. The rates are here on the bottom of page 30. And this rollover simply just means if you use less, you can roll over $500. If you remember what those, like the cell phone rollover minutes were like, then you would have a concept for rollover amount. If you've got a $5,000 max, you can roll up to $500 per year if you don't spend more than $1,000. And then they'll let you do that 3 times. So it actually increases your maximum benefit amount, which is pretty cool. There's nothing you need to do to do that. Like there's no program you have to enroll in, is my point. Vision is pretty basic. It's through Guardian. This is the one that I I wish I signed my 13-year-old for, because I didn't anticipate her needing, I didn't anticipate her vision going poorly, but I should have remembered that. Mine went downhill about her age too. So you walk in and you'll get $10 in copay, and then you'll have a decision to make. Do you want lenses and frames, or do you want contact lenses? You can get the lenses that go in the frames at $25, unless you're really, really blind. Then you'll be out more than a copay. That's what I have to do. And then you'll get $130 allowance for those frames and a 20% off the remaining balance. Or you go the contact lenses route and they'll give you $130 for that. Not super expensive, neither is mine. And you get a pretty darn good benefit for that level of investment. This is where we talked about earlier in our time together. Your beneficiary, Employee Navigator, will bother you for that. So it's through Guardian, and plans paid for all by the firm. And if you want extra life insurance, then most of you, unless you're a brand new person and this is the first time, you will likely have to do evidence of insurability. That means if you want more than the basic life, and this isn't your first drill, then you will have to apply for it. You can get some on yourself, your spouse, or your kiddos, but spouse and kiddo are always, those amounts are always tied to the amount that you choose. So you can't choose 0 on yourself and 250 grand on your spouse. Might look kind of weird if you did that too. It's tied to your amount. Here are the different rates, and just in case you love doing math before lunch on a Monday, we wanted to give you that opportunity, but you can also move a button on Employee Navigator. The life insurance is based on age, and it's based on how much you elect. And when you go to Employee Navigator, it'll auto-calculate all of it for you. Just in case you wanted to know the supporting documents and the calculations, there you go, bottom of page 35. One of the last things we'll talk about today, y'all, as we begin to wrap up, is disability insurance. The biggest risk actually is long-term disability, and this is 100% paid for by HWA. Super generous here. This is not cheap. So long-term disability is up to $5,000 a month, 60% of your pre-disability monthly earnings to Social Security normal retirement age, which is different for different people, but just figure somewhere around 67, something like that. That's not exact, but that's fairly close. And so if you have any further questions about that, please let us know. In this contract, it does get very, very specific. So if you have any questions, just let me know. But generally speaking, long-term disability insures up to 60% of your paycheck for a long period of time, up to Social Security normal retirement age. So it takes the risk of you not being able to work and earn an income, and it puts it in an insurance policy. That's what long-term disability does. Short-term disability, on the other hand, protects your paycheck for up to 25 weeks, up to $1,800 a week, and kicks in after 8 days, depending on what is going on, whether it's an illness or an accident. You'll be able to see rates auto-calculated for you on Employee Navigator, but the supporting math is here on the bottom of page 36. This is the free stuff page. It's super exciting. You've got a couple of different ways to get free stuff. So Guardian offers up to 3 face-to-face therapy visits, which is super cool. It's a great way to get help when you need it. Just got to remember the website, and it's free to you. We really like that one. Travel Assist, honestly, you get a gold star if you remember this is here. Best example I have is when somebody from Texas was traveling in Florida and they lost driver's license and boarding pass, they lost everything. actually called the travel assist that is available through their insurance company, and they found a human being who helped them get documents in order to get back on the plane to get home. But if you remember that when you're in the middle of that frenzy, I mean, that's pretty clutch. Will prep. I do like that this is free. My mom used a will prep via an insurance company. It's basic, it's template based, but it is definitely in the category of adulting. If you're focusing on this, maturity, it's a good thing to tell anybody else where you want your things to go, no matter how complicated or not your situation is. So my mom was able to use this, and it was just a very helpful document. Premium only plan just means any benefit that we can pass from HWA to you without being taxed, we will. And the rest is further information from Guardian and different vendors on different products that we have gone over. So this is the EAP. That's the will prep from Guardian. And then the rest of the information in here, y'all, is great late night reading material. We are not going to go over for the sake of time. It's required notices. And we will end on this page right here. You've got all of your vendor contact information here. Sachi is like an insurance ninja. She loves problems. And so if you are confused or you have an issue with anything that we've talked about today, please feel free to reach out to her. I also am available more for compliments, less for problems. Sachi's just really great at that part. She really is. I joke with her all the time, but we both are all day, every day in the insurance business, helping our customers navigate this and explain it. And so just wrapping it all up, we kept all insurance carriers the same. You'll see any cost change, if any, reflected on Employee Navigator. If you have any questions, please reach out to myself or Sachi, and everything is going to be done again in Employee Navigator. You've got Wendy's contact information and then ours here. And with that, I'll take it off sharing and pause for any questions if there are any. So I'll stop right there. Anybody have any questions that we need to address today?
Our conference room C is empty, so we're going to log out.
Okay, very good. If anybody else has any questions, please let us know. Thanks, y'all.
Thank you. Thank you.
Have a great day.